the markets taking a break after the recent rally and small correction, investors are also looking at options outside the country. My colleague Shailendra Bhatnagar spoke to Pratik Oswal, head passive funds at Motilal Oswal AMC, about the global diversification in equities.
International funds are a relatively new segment that we've seen flourishing very well in India. How do you see their growth over a period of time? And why is it that initially we have international funds that are focused mainly on the US markets? Of course, newer ones are looking at the Asian geography too.
Yeah, I think the thesis comes from, portfolio theory. I think if you look at most investors outside of India, so if you look at investors in the UK or the US or even Southeast Asia, you'll see that a lot of their portfolio is devoted towards companies and stocks outside their home country. And I think in India, this was not the case. But I think today people have realized that a part of your portfolio should be exposed towards stocks and sectors and companies outside of your home country. And what we've seen in the US markets in the last 10 years, 15 years, I think the potential to wealth creation is very, very high. I think I do believe that, yes, US is 60% of global GDP market cap. So I think international investing is a category. The first obvious market that you can look for is the US market, because you're looking at the biggest market, also a very fast growing market. The second thing to why I think US markets are important is because it's one market where you have global business models. If at just the S&P 500, which is the top 500 companies in the US, about 60%, 55 to 60% of their sales is actually happening outside the US. So I think when you're looking at global investing, you want to buy global stocks. And the center, the exchange or the country which holds the most amount of globally diversified business models happens to be the US, which is why I think US tends to be the first category. And now obviously, once you have the US in your portfolio, I think it makes sense to add, say, emerging markets or developed markets. But I think US tends to be the most popular because of how well diversified its capital markets.
When you look at international funds, and share this with our viewers, that there is an additional kicker that these funds get, because traditionally we've seen the rupee depreciate definitely versus the US dollar, as also weaken against several other currencies. So there is a kicker involved apart from the fantastic return that the underlying index already gives. Please explain that.
Yeah, so buying international equity, you're actually buying not one but two asset classes. You're buying US stocks, and you're also buying US currency. And what we've seen is that the currency, the INR,
return
tends to depreciate by 2 to 4% every year for the last 15, 20 years. So I'll give you an example. 2 to 4% might not be a big number, but actually if you look at the numbers, the NASDAQ index, for example, the fund in question, if you look at just the NASDAQ index in the US, over the last 15 years time, it's actually gone up 6 times. But if you convert this in INR, it's actually gone up 12 times in India. So that is, so I think you're looking at, the INR depreciation. So you're buying a US currency, which anyway is a good thing because, increasingly as customers, we are, traveling abroad, we are buying more.
Comparative return.
So I think our spending is also in line with the US dollar. So I think it makes sense to have some of that in your portfolio. And lastly, also, and this is something that people also don't realize, but the dividend payments in the US companies tend to be a lot higher than Indian companies. You're looking at close to 1.5–2% dividends every year, which also adds up very meaningfully to your portfolio. So I think if you combine dividends, the US currency as well as US stocks, I think it's a very good value proposition for anyone who's looking to create wealth in investing internationally.
Presuming that the overall portfolio is for about 10 lakh rupees in the mutual fund category, how much would you want the international funds to be?
Yeah, so this is very important. We obviously talked about wealth creation in the international domain, but actually, one of the key reasons to why a lot of our investor base invest in sort of international funds is actually portfolio diversification. What we've seen is that Indian markets and US markets tend to move in very different directions. So when you're having a NASDAQ or an S&P or any other international fund in a portfolio, you're essentially getting very similar returns than what you would get in India. but your risk is coming down dramatically. International equity is one such asset class where return is exactly the same or maybe higher, but risk comes down dramatically. So we believe that portfolio diversification is very important, and international is an asset class that should be there in our portfolio. So we believe that out of the 10 lakh rupees that you're looking at investing, I would say at least 1.5 to 2 lakh rupees is something that investors could look at investing in international stocks or funds